Hi everyone. All right, so I'm going to cover my stats for the first week of January, first proper week of January. I didn't trade the Monday, the Friday, 2nd of January. There was nothing for me to trade. So my first proper day of trading back in 2026, first week of 2026 was the 5th of January, and it was my big losing day. I had this anxiety and pressure on me, which then led me down this rabbit hole of making bad decisions and ended up being a big outlier day in terms of the loss that I sustained. But before we look at my stats, let's just remind ourselves my focus for the next 50 trades or so, at least, before I increase my size, is to look at my RNR, which is risk to reward ratio. I want to increase that and have a positive RNR. So if I'm risking $5, then I expect to make at least $5 to $10. All right, so that gives me, if I make $10, that's a risk to reward ratio, risk to reward ratio of 2 to 1, or reward to risk ratio. And the other thing that I was going to focus on this going forward, anyway, not just for the next 50 trades, is holding my losers for a less amount of time in comparison to my winners. Now we'll dive deeper and look at the stats, and you'll see how that's been working out. But there is a fine balance between your RNR and your accuracy, which you'll see in a moment, because in order to have a better RNR, it means that you need to cut your losers much faster. So before, where you may have got into a trade and sort of given it a bit more wiggle room or given it space to actually see what it wants to do, if you want a better RNR, then you need to be able to cut it. So you break out or bail out. It's a common saying or famous saying that I'm sure a lot of you are familiar with. So by doing that, it means that if the trade is going against you and you cut it for a smaller loss, it might do a 10, 15, 20 cents dip and rally back up. And because you're out of that trade, you might miss that trade. I mean, of course, you can always get back in, but more often than not, these swings happen so fast that if you're not in it, you've missed it, right? So that this is the nature of breakouts, is that they happen really fast, and the pops can give you 40, 50 cents pops. And if you've missed it, then it may never recover that move that it's made initially. But anyway, let's jump on the screen share and have a look at my stats quickly. All right, so first week of January, and I'm sitting down minus 37 cents. Honestly, I'm really thankful that it's not a bigger red week than I started a week with. Because don't forget, I'm only trading with 20 share size positions right now, as I'm working out these issues with my psychology, with my trading strategy, and just fine tuning it. So I'm giving myself putting myself under less pressure whilst I'm fine tuning these aspects of my trading. So Monday was a big outlier day. In fact, if I take Monday out of my stats, I had a really solid week in terms of maintaining and accomplishing what I set out to accomplish, which is better RNR and holding my losers for less time. In fact, even with this big red day, I still sort of hitting those my targets in terms of my stats. But of course, without this red day, I would have ended up with better accuracy. But before we look at what Monday was like, let's just have a look at my overall stats in terms of where I stand on accuracy and so on. So as you can see up here, we're minus 37 cents in the red, which is perfectly fine. This is a gross position, by the way. You need to add my fees and commission to this figure, which gives you my total net profit, net position, which is probably about under $5, I'd say. Yeah, about just under $5. Now, something to bear in mind is that I would have paid more fees and commission, because something that I had been doing, I'll show you on my stat when we have a closer look at some of the days, is that I've been scaling out of my trades. And by doing that, I'm incurring a minimum fee or commission to my broker. So that's part of the reason why my commissions are slightly higher. Perhaps it's something that I should avoid doing, maybe I should have 2 exits rather than 3 or 4 exits. So what I tend to do is I sell half and then I sell another half when it reaches perhaps a new target point, or maybe if it's going against me, or where I sell it in like 3 or 4 lots. I sell quarter position, then another quarter, or maybe a half. So as you can see, that commission adds up. So that's something to bear in mind. But on the other hand, my number of my winning trades were 8 and number of losing trades were 9. So almost 50-50, but more or less break even. So 47% accuracy. It's not bad given that I had the biggest losers, or the number of losers, come from the Monday's trade. So all in all, 17 trades. So another thing to bear in mind is that my focus for the past few months has been on quality of trades or quality stocks. Now, perhaps the setups that I've might been taking have not been A quality setups because I've missed the front side of the move, and I've tried to capture some gain from the momentum that's still within that stock. But the idea is that I'm not trading on anything that moves. So I'm only looking at A quality stocks. So that means it has to have a fresh catalyst. It has to have a low float. It has to be a US based stock. It has to have a relatively higher volume in comparison to previous days and so on. And it needs to be up by a certain percentage. So these are all factors that keep me out of bad trades. And I'm not saying that there's not money to be made on B or C quality setups, but we are in a market that's quite cold and doesn't warrant us taking unnecessary risks. Of course, I'm talking about a beginner trader like myself who's still learning the ropes, and I've got a lot to cover. So I need to give myself the best chance in order to be able to succeed. And don't get me wrong, I've reached this conclusion based on mistakes that I've made last year. So that's what I'm telling you. It's not wisdom that I've sort of suddenly woken up with, or as soon as I started trading. It's something that I've learned painfully by bleeding money and losing a lot of money early last year. But you can watch a recap of my last year's stats in the description below. I'll leave a link for you to have a look at that after this video if you like. So accuracy is not so bad, but what's even more important for me right now is this: my average winners versus my average losers. Now, the reason my average losing trades are higher in this instance is because my outlier trades loss that I had on Monday, the biggest loss I had on one trade was $11, which was totally unacceptable. That was really bad, and that was me giving into FOMO and buying at the worst point. But nevertheless, even with that terrible trade, I've still been able to maintain a positive R&R. So even though I made that mistake on Monday, I came back on Tuesday onwards. I focused on what I was supposed to be focusing on, which was my stats. And you know what? The P&L picked itself back up. I know it's still the red week, but it could have been a $30 or $40 red week, right? But it didn't. I stopped it from happening, not because I was consciously trying to make back the money. No, I was just saying, you know what, doesn't matter. It has happened. My focus right now is still to have better stats for the rest of the week than focus on what the mistakes I made on Monday. Of course, I did a lot of reflection, and I reached out to people. And I talked to people and I got feedback on those trades. So it's important to do that, but it's all part of learning. So much better R&R. Of course, this is where my largest loss and largest gain. This is where obviously I let myself down, but I'm not going to go into any more detail than this. I think I'll do a monthly review, and then you can get a better understanding of where my K ratio and profit factors are. But right now we don't have enough trades to sort of get a full picture of what's going on. But the point is, first week is done. I've shown consistency, I've shown discipline, and I've shown that even if I have a big red day, I'm able to get back on the horse and not let it affect me. In fact, I only took 3 trades the following day, and I think, 66% accuracy. That last trade probably wasn't necessary, but 20 shares in, 20 shares out, $8.25. That was a good R&R. That was excellent. I think that was almost 2 R&R. It would 1.7, 1.8 maybe. 1.7 maybe. But yeah, that probably I didn't need to take that trade. But let's have a look at Monday's trade and where I went wrong. So as part of my trading plan, something that I've put in to control my losses and control my emotions is that the rule is that, well, okay, let's not say rule, it's just habits that I need to develop, is that if I have 3 losing trades back to back, then I should step away from the screen. And guess what? I didn't do that. First day, trading day back, getting all hijacked with emotions and seeing the stock moving so much. I'm like letting the FOMO get into me and control my decision making. And then what do? I just chase, and then you can see what happened then. And I instead of actually reducing size, I increased size stupidly. So one of the rules or habits that I need to develop is to step away. If I've had 3 losing trades, okay, just take my hands off and be like, something's not right. Let's just take a breather. Maybe this is not the right time. And I shouldn't allow those red trades to get any bigger than $3. Even though my 1R is $5 right now, I think $3 with 10 shares, it's pretty much at the point where I'm like, okay, something's not right. Let's step away from this. But so let's look at this big losing trade. Of course, this is very obvious where I went wrong with this. It's completely obvious that I gave into FOMO here. I hope you can see that clearly. I bought again, average down, and I sold as it popped, or I sold at the bottom of this red candle. And I sold again as it popped back up or as it was going down. Of course, if I'd held on, this is how the market likes to kick you when you're down, it would have rallied back up. But that was clear sign of FOMO. I had no control. So these are bad habits that need to break out, because unless I am able to break out of these cycles, then my edge is always going to my whole edge and my system falls apart. Because right now, especially right now, where we are in a cold market in comparison to some of the big moves that we had last year. But in order for me to be able to keep my head above the water, I need to keep these red days under wraps. And I'm hoping that in the next few weeks, this stands out to be the only outlier for this month. That's my aim, and that's what my focus is. Now, I do a separate I've got a separate app that I use called Miro, however you want to call it, and I've been doing recaps using that, and I keep a note of what I liked about the week and what I'm going to work on for next week as a reminder, or somewhere for me to dump the ideas and thoughts in my head so I can reflect back on it. Now, this is obviously one of them, is to keep this the only outlier day. Of course, red days are inevitable. It's just about keeping them as small as possible and manageable. Because if I'd walked away a lot sooner on this day than I would have, maybe if I'd walked away after these 3 red trades in a row, then I would have been in a much better spot right now. And actually, I think I would have had a green week, even with commissions and so on. So I think I'm going to leave it there. Let me know what your thoughts are of that analysis. Of course, it was very brief. It wasn't fully in depth because we still don't have enough figures for this month to really dig deeper into ways we can improve. I'm on the right track, I feel like. Now, there's something I want to point out. I took a screenshot of this and I put it into ChatGPT. And ChatGPT gave me a deep analysis of those stats based on what I've given it, all right? And I give it I gave it a bit of a background as to what sort of trading I'm doing. Now, if you're going to do that, or if you're someone that does that, just bear in mind that you got to take what it tells you with a pinch of salt. The reason I say that is because, for instance, it talks about me holding some of those winners for much longer. So it's saying that if it's a winner, then you need to hold it for a bigger move. But now we know better than anyone else that that's not quite possible, right? So let me just share my screen again. So for example, if I was to buy, let's say if I was to buy here, then I cannot hold this beyond this 1 minute candle, I mean, then I'd be in red, right? So if I'm up by 1 hour and it's telling me that I need to wait until it's 2 hours, I cannot technically do that. So of course you'd hold it, and then when it starts going against you, perhaps then you start selling. So perhaps that's the way I need to look at it. But of course, if obviously if you're buying off these support levels, then wow, you're already in the green as soon as the first candle is closed. So you've got room to breathe, and none of these candles have done any crazy wicks down where you're like, holy cow, like this is gonna reverse on me. I need to get out. So yeah, you could have, perhaps if you had an entry here, you could have held it all the way even into the open, and you could have, capitalized, and that would have been a much longer hold. But ChatGPT was telling me to hold for like 20 minutes, 30 minutes. I'm like, hold on. Some of these moves are like pops. These are like, so it's been good, because I've also heard people in the Discord talk about using ChatGPT. I just wanted to give sort of just treat it with caution, and you got to take everything with a pinch of salt and apply your own thinking, because for it to give me the proper advice, I assume that I need to provide a lot more context, and I still think it might not get it right. But let me know what your thoughts are. If you're using AI as a companion, well, as a trading companion, or someone that gives you a trading buddy, perhaps trading buddy that gives you feedback, let me know if you've had similar experience and how you treated. But also let me know what your thoughts are on the stats, and how would you have traded this week, and what are your thoughts on what I've said. Of course, I'm learning, and it's good to take an advice and hear other people's perspective, but at the same time, we don't know what everyone's perspective is. Like, I mean, where are they coming from? Are they coming from a losing point of view because they're like a losing trader, or a winning trader? Because if they're a winning trader, then that's the advice that you want to really listen to and heed to. So you need to be careful who you receive advice from. But I always welcome feedback, and I think it's always good to get a second opinion from someone else that's independent to yourself, because then you're being truthful with your stats and yourself, and you're not trying to convince yourself that you're doing the right thing. But yeah, I'll catch you guys first thing on Monday, and yeah, let's see what second week of January has in store for us.